Good morning from Council Chambers. We're live for Audit Committee on April 11th, 2025. Before we begin, I'll go over the emergency response plan for this room. In an emergency, everyone must evacuate through the nearest safe exit. Those seated in the gallery, please take direction from security to evacuate. Council takes direction from me as the meeting clerk to evacuate. After evacuating the room, please proceed to a stairwell. Take the stairs to the ground level and evacuate the building through the doors marked emergency exit and go to a muster point. Do not take an elevator or walk through the city room, which is the large room in the middle of City Hall. Anyone with limited mobility should identify themselves to security or the meeting clerk during an evacuation. Finally, please speak with the security or the meeting clerk if you require first aid. Thank you. Over to you, Chair.
Thank you very much. I'd like to call this meeting to order, Audit Committee non-regular for April 11th, and do the land acknowledgement. So at this time, I'd like to acknowledge that we meet on the traditional lands of Treaty 6 territory in the Métis homeland, and acknowledge the diverse Indigenous peoples whose ancestors' footsteps have marked this territory for centuries, such as Cree, Dene, Saulteaux, Blackfoot, Nakota Sioux, as well as Métis and Inuit, and now settlers from around the world. I'll do a roll call of committee members. Councillor Knack.
Good morning.
And Member Matamambe.
Good morning.
Good morning. And Councillor Rutherford.
Morning.
And Councillor Principe.
Good morning.
Good morning. And Mayor Sohi and Mr. Burrows are not available today. Let me see. Adoption of the agenda. Can I have someone move adoption of the agenda?
I would love to move adoption of the
I
agenda.
knew you would.
Okay, I move that the April 11th, 2025 Audit Committee non-regular meeting be adopted with the following changes. The addition of 5.1, City of Edmonton 2024 Consolidated Financial Statements, and 5.2, KPMG 2024 Audit Findings Report, published April 7th, 2025.
We don't have to read in the replacement? Okay, no. Okay. So if I have a vote on the adoption of the agenda, please, unless there are any questions.
Councillor Principe is a yes.
Just waiting on one vote. Councillor Rutherford, looks like.
It's not coming up in eScribe. I'm a yes.
Okay. I have all the votes.
Display the votes, please. And that is carried. I don't have any protocol items, not aware of any others. Okay, we'll move on to selecting items for debate. Well, for expediency, I'll select 5.1 and 5.2, and they will be dealt with together. We have no votes, or sorry, we have no reports not selected. There's no requests to speak. Nothing for a specific time on the agenda. No reports to be dealt with at a different meeting or to reschedule. So we will begin with 5.1 and 5.2. And presentation, or sorry, administration, you have a sort of a joint presentation with KPMG? Okay. Go ahead, please.
Thank you. So today we are presenting the City of Edmonton 2024 Consolidated Financial Statements. This is our formal legislated 2024 financial reporting to Audit Committee. So with me today are Kent Bjornstad, Director of Corporate Accounting, Reporting and Policy, and members of his team, in person and virtually, to help present and answer questions. We also have KPMG here, who will present their audit findings report after we've completed our presentation. The consolidated financial statements before you have been prepared by management in accordance with the Canadian Public Sector Accounting Standards, we call PSAS, as required by the Municipal Government Act. In addition to legislative requirements, these statements are another part of our financial transparency and accountability to the public. They present to the public how the city manages its financial resources and the prudent use of those financial resources to provide city services and infrastructure. The statements before you today show that the city is in a healthy and stable financial position. With an overall accumulated surplus of $19.2 billion, the city's financial position remains strong and resilient. Robust financial policies, strategies, guiding principles, and a healthy financial position ensure the continued sound fiscal management and long-term financial sustainability for the City of Edmonton. In July 2024, the credit agency Standard & Poor's, S&P, reaffirmed the city's AA credit rating with a positive outlook, partly due to solid financial footing, despite facing pressures from rising capital costs and increasing debt to finance the city's capital program. The city will continue to be challenged to manage emerging competing financial needs as the major center for the region and to maintain existing services while addressing service and infrastructure needs associated with that growth. These challenges and funding strategies will be discussed in future budget discussions. I will now hand it over to Kent to start the presentation.
Thanks, Harm. As Harm mentioned, the consolidated financial statements are prepared in accordance with Canadian Public Sector Accounting Standards, PSAS, as required by the Municipal Government Act. The MGA requires the financial statements to be made public by May 1st of the year following the fiscal year reflected in the financial statements. The statements are required to be audited by an external auditor with findings presented to Audit Committee. The auditor will issue an auditor report on the financial statements, assessing whether the financial statements present fairly in all material respects the consolidated financial position of the entity as at December 31st, 2024. These financial statements are most commonly used by academia, financial institutions, other municipalities, and other orders of government to assess the city's financial health. More summarized financial reporting is provided through the financial report to residents, which includes highlights from the more detailed financial statements and provides residents a summary of the city's financial health. That document is created and produced after the statements are reviewed by Audit Committee and approved by City Council. Attachment 1 is the draft consolidated financial statements for the City of Edmonton, along with the management's responsibility for financial reporting and the independent auditor's report. Attachment 2 is the draft financial statement discussion and analysis, which provides additional background to support an understanding of the consolidated financial results and explains year-over-year variances, as well as variances from budget as reflected in the financial statements. Attachment 3 is a summary of assumptions and estimates used by administration in preparation of the financial statements. For 2024, the Public Sector Accounting Board, commonly referred to as PSAB, required public sector organizations to implement new accounting standards as part of their 2024 year-end financial statements. These include new standards for revenue, purchase intangibles, and public-private partnerships. Next slide, please. The financial statements reflect city departments as well as a number of other organizations and enterprises accountable for the administration of their financial affairs and resources to the City of Edmonton. The assets, liabilities, reserves, revenues, and expenses of these organizations are consolidated into the financial results of the city. Each of these organizations are governed by their own separate boards and are responsible for managing their financial resources. EPCOR, a subsidiary corporation of the city, is accounted for on a modified equity basis, consistent with the generally accepted accounting treatment for a government business enterprise. EPCOR reports their results in accordance with international financial reporting standards. Under the modified equity basis, EPCOR's accounting principles are not adjusted to conform with those of the city, and inter-organization transactions and balances are not eliminated. The financial statements exclude trust assets under administration for the benefit of external parties. Next slide, please. The legislative financial statements presented here today reflect a different presentation of financial information than the quarterly financial updates that are provided to City Council, the most recent being the preliminary 2024 year-end financial updates for operating and capital that were presented to City Council on March 18th. The table on this slide highlights some of the key differences. The first main difference is that the legislative reporting includes all organizations within the city's consolidated reporting entity. These are organizations that manage their own budgets and have their own respective boards. Quarterly financial updates provided to Council only include the City of Edmonton legal entity for which Council approves the budget. The other key differences between the reporting are in expenses, where the legislative statements include non-cash expenses such as amortization and exclude transfers to and from reserves, transfers between operating and capital, and principal debt payments. There are other differences as well in terms of how information is reported between the two different types of financial reporting. These differences are identified in Note 33 of the financial statements, reconciling the 2024 budget to the 2024 financial statements. Next slide, please. The Public Sector Accounting Board, PSAB, required we implement new accounting standards in the year. The Revenue Standard and Purchase Intangibles Guideline were applied effective January 1st, 2024, without restatement of the prior year results. The public-private partnership standard was effective January 1st, 2024, applied retroactively without restatement of our prior period results. I'll provide a brief walkthrough of the impacts of these implementations. Next slide, please. Public Sector Standard PS 3400 for revenue provides guidance on accounting treatment for revenues arising from transactions with and without performance obligations, which are enforceable promises to provide goods or services to a specific payer. A large portion of the city's revenues already fall under existing PSAB standards, primarily revenues for taxation covered under PS 3510 tax revenue, government transfers covered under PS 3410 government transfers, and investment earnings covered under PS 3450 financial instruments. This new revenue standard is intended to capture all other city revenues. Generally, this standard deals with the timing of when to recognize revenues earned by the city. With taxation revenues, investment earnings, and government transfers being excluded, the primary revenues applicable under this standard are user fees, permits, licenses, fines, and franchise fees. The implementation of the standard included extensive training, interviews, surveying, and analysis with the city staff to determine whether or not performance obligations existed with these revenue streams and the resulting accounting treatment. Overall, many of the revenue streams in scope of the standard already follow general accounting concepts around revenue recognition, resulting in a minor impact upon implementation of PS 3400. The impact of implementing PS 3400 on January 1st, 2024 is an increase of deferred revenue and a decrease of revenue by $1 million. Overall, the same amount of revenue is recognized by the city. It is just recognized to align with the period of the performance obligation. The reduction in revenue from the implementation will be recognized in 2025 as the revenue is considered earned as performance obligations are met. Public Sector Guideline 8 for Purchase Intangibles provides guidance on recognizing purchase intangible assets within the Statement of Financial Position. A purchase intangible asset is defined as an identifiable non-monetary economic resource without physical substance acquired through an arm's length transaction from an external organization. Effective January 1st, 2024, city business areas were requested to identify any purchase intangibles. The city did not identify any significant purchase intangibles. Therefore, this guidance did not have an impact on the city's financial results. Some examples of purchase intangibles that may be recognized by government organizations include patents, trademarks, learning resources, and copyrights. PS 3160 Public-Private Partnerships, or P3s, establish accounting for P3s, which are agreements or projects where the private sector entity is responsible to design, build, finance, operate, and maintain infrastructure on behalf of the public sector entity. To date, the city has only entered one P3 arrangement, which is for the Valley Line Southeast with the private sector entity TransEd. The Valley Line Southeast project started in 2016, with service commencement of the line being achieved in the fourth quarter of 2023. The city had already been accounting for this P3 arrangement since inception of the agreement using early draft guidance provided by the Public Sector Accounting Board and other relevant accounting standards, and it was generally in line with the accounting treatment recommended with the new P3 accounting standard. The adoption of this standard resulted in expanded disclosures as well as impacts to the timing of expense recognition related to life cycle rehabilitation expenses. This is due to the standard requiring a straight lining of the life cycle rehabilitation scheduled payments over the operating period. I will now pass it back to Harm to briefly discuss some of the audit findings in 2024, other items, and next steps.
Thanks, Kent. So during year-end, accounting errors were identified related to tangible capital asset contributions, portfolio investments, expropriation liabilities, and the P3 long-term liability. The errors mainly related to transactions occurring before 2024 that were corrected by administration in 2024. So as a result, the financial statements have been accurately reflected as at December 31st, 2024 for these specific items. Because some of the errors were not adjusted in the prior period with restatement in 2023, they are reflected as uncorrected audit differences in the auditor's report, which you'll see shortly. Administration is of the opinion that the lack of restatement in 2023 will not influence the economic decisions of users taken on the basis of the financial statements. The external auditor, KPMG, agrees that no prior period adjustment is required. However, it identifies the misstatement due to the timing of when the adjustment was recognized in the financial statements. Other adjustments were found in the 2024 results as well, which were not corrected in the current period due to their materiality, but will be updated in 2025. So starting from the top, for the tangible capital asset contribution error, in 2019 to 2020, assets were incorrectly recorded as contributed assets from developers, when in actuality they were city-funded and also recognized as city-funded tangible capital assets as well. So this led to a double recognition of the same capital asset. The situation was unique in that the road was being constructed by a developer, which will typically follow the process of a contributed asset. But in the case of this developer, it was being funded and paid for by the city to construct the arterial road. This resulted in overstated assets, as the asset should not have been recognized as contributed from the developer, but in fact a city asset. Therefore, the contributed asset in tangible capital assets was overstated, as well as the contributed tangible capital asset revenues over that time frame. In 2024, corrections were made by decreasing tangible capital assets, contributed tangible capital asset revenues, and the related amortization to reflect the capital asset only being recognized once in the city's financial statements. To prevent a similar error from happening in the future, Financial Services is implementing additional controls within the asset contribution process. The controls include a more thorough review of the contributed asset list with project managers before capitalizing the asset, ensuring any instances of city funding towards the assets are properly recognized. For the investment earnings error, last year during the 2023 year end, it was incorrectly concluded by administration that a dividend and an investment gain that were in the same amount were double counted in the investment custodian statements in November and December 2023. The city followed up with the investment custodian to better understand the apparent double counting of investment earnings late in 2023. However, a conclusion was not reached before the end of that year. The analysis was ongoing when the 2023 financial statements were finalized. This investigation carried into 2024 with the investment team and the city's investment custodian. It was determined that the two transactions were in fact distinct transactions and should have been recorded as two distinct investment earning figures in the 2023 financial statements. This was corrected in the 2024 year-end financial statements by increasing investment earnings by $18.5 million. Moving forward, the Financial Services team will expedite investigation with the city's investment custodian and the city's investment team to resolve any future discrepancies as soon as possible. The next error was related to expropriation liabilities. So in terms of context, an expropriation liability arises when the city takes ownership of a private property with compensation provided to that owner. And a financial liability is established for the estimated compensation to be provided to the property owner and recognized in the financial statements as a liability. Administration estimates expropriation liabilities based on many factors, including the review of financial records, using professional judgment, compensation requested by the property owner, market value information, related information from similar expropriations in the area, and internal and external expert reports as well. During the audit, upon review of certain expropriation liabilities, it was determined that based on available information, the expropriation liability was overstated. This was corrected in 2020-24 period by reducing the liability and the related tangible capital asset balance. In fact, you will notice that there was a replacement page added to your agenda yesterday as a result of additional reductions to the expropriation liability estimate. As Legal Services further reviewed their estimates for expropriation liabilities right up until a day or two before audit committee date, which is the usual practice, further adjustments were made to the liability based on available information. The additional changes were made by Legal Services to ensure consistent liability estimation process across all the expropriation liabilities. So starting in 2025, Financial and Legal Services will work closer together during the year and at year end to go over significant expropriation liabilities and ensure appropriate estimates are recorded in the financial statements based on consistent estimation practices, including tracking and explaining year-over-year changes for each of the files. There will also be process documentation and training to ensure all parties that are involved understand the process to record expropriation liabilities in the city's financial statements. The last accounting error was related to the P3 long-term liability related to the Valley Line Southeast LRT and the P3 partner. The long-term liability included within the long-term debt on the statement of financial position recognizes that the repayment of capital construction costs incurred by the P3 partner for the LRT line over the term of the agreement out to 2050. A portion of the P3 long-term debt included amounts related to the monthly capital payments that were not made to the P3 partner due to the project reaching service commencement later than anticipated. Accordingly, in 2024, City Administration concluded that these payments were contractually no longer owed to the P3 partner, therefore the liability was reduced by around $13 million. However, upon further review of the actual contract, the long-term liability should have been reduced for capital payments no longer due to the P3 partner in 2023 due to the late opening as per the contract. So similar to the other errors, the liability has been correctly stated at the end of 2024 in the financial statements. However, should have been adjusted in 2023 prior year figures due to the terms of the P3 contract. So admittedly, there's errors noted in this year more than in prior years. Administration has closely reviewed all the errors to understand the root causes. We do not believe these errors to be indicative of a pervasive or significant internal control issue within the financial process. Administration will work to improve the processes and provide additional training where necessary to mitigate potential of similar errors in future years. On March 18th, Administration presented the preliminary year-end results to Council, which were based on the results as of mid-February, as the year-end close process was still ongoing. At that time, the preliminary tax-supported deficit was reported as $0.7 million, or $700,000. As we closed out the year-end process, there were additional accounting adjustments required that resulted in the overall tax-supported deficit increasing to $4.2 million. The additional accounting adjustments were related to transferring unspent election funds to the newly created election reserve and increasing WCB premiums payable during year-end. The actual salaries paid to city employees during the year were higher than the estimated earnings that 2024 WCB rates were based on. Therefore, the WCB premium payable by the city was also higher. The increased tax-supported deficit does not significantly impact the repayment strategy approved by City Council for repayment of the FSR. The FSR is still forecasted to be above its minimum balance by 2029 in accordance with the Council-approved FSR repayment plan. The preparation of the financial statements includes amounts based on the best estimates and professional judgment of management. A summary of instances where management has made significant assumptions and estimates is provided in Attachment 3 to the financial statements and in Note 1 in the financial statements. There are new accounting standards that will be coming into effect in the upcoming years, affecting our December 31st, 2027 financial statements. So we're continuing to assess these standards to determine their impact on financial statements. The future accounting standards are articulated and further discussed in Note 1T to the financial statements. In terms of next steps, subject to the recommendation of Audit Committee today, the 2024 City of Edmonton audited financial statements are scheduled to be presented to City Council at their meeting on April 22nd for approval. The annual report will be available on the city's website shortly after that. The deadline for submission of the audited financial statements, as legislated in the Municipal Government Act, is May 1st, 2025. The provincial financial information return is being finalized and will be filed with the Minister after their approval of the financial statements. Summarized financial reporting to residents will also be provided with a reference to the full annual report later this year. The financial report to residents, as we call it, provides a condensed analysis of the financial statement and budget information in a shorter, more accessible format. I will now hand it over to KPMG for their audit finding report.
Thank you. Good morning. My name is Natalie Kinnell, and I'm a partner with KPMG here in Edmonton. And today I also have with me Nico Ferderer, who's an engagement manager. And we're here representing KPMG, your external auditors for the City of Edmonton. You have been provided with our audit findings report, which summarizes the results of our audit of the consolidated financial statements of the City of Edmonton for the year ended December 31st, 2024. This report does build on our audit plan, which we presented on November 29th of 2024. For the purpose of this presentation, we'll assume the report has been read and will highlight more significant matters for you today and then welcome any questions or comments at the end. As far as the status of our audit, this is outlined on pages 4 and 5 of our report, and also summarizes our audit activities performed to date. As an update to our audit status, we are substantially complete our external audit, pending our discussions with this committee today and the approval of the statements by council in the following days. We will release our auditor's report once those statements have been finalized, which we expect to be April 22nd. I want to emphasize that we had the full cooperation of administration throughout the course of the audit and full and open access to any and all information required. And we are satisfied at this time that the city's consolidated financial statements, as provided to you today, are a fair presentation of the city's financial position and operating results, and that the significant accounting policies, estimates, and disclosures in the financial statements are appropriate. Our report lastly confirms that for the audit committee that we are independent of the city and therefore are in a position to issue an independent auditor's report. I'll now turn it over to Nico, who will walk you through our specific findings.
Thank you, Natalie. Pages 7 through 9 of our report highlight the work performed on key areas of focus. As part of our audit plan, we outlined a number of areas of audit focus, which include the presumed risk of fraud for management override of controls, which is a presumed or required risk under professional standards, the recognition of revenue amounts subject to external restrictions, the city's investment portfolio, tangible capital assets, both contributed and constructed by the city, and the implementation of new accounting standards in the period. The first risk area I'll mention is the presumed risk of fraud related to management override of control and is discussed on page 7 of our report. This is a risk that is present in every audit, as management is in a unique position to perpetrate fraud due to their involvement in the financial reporting process. Our response to this risk is twofold. We assess the design and implementation of controls around the review of journal entries, specifically those around segregation between preparers and reviewers, and we test journal entries that are considered higher risk of fraud based on our deep understanding of the city's financial process. Based on our procedures performed, we have no findings to report to the committee. Page 8 continues with discussion of our work over remaining areas of focus. During our work over tangible capital assets and portfolio investments, we noted misstatements that required some adjustments to our previously communicated audit approach. Our report includes the background and details of these adjustments. Based on the work performed, we have no other findings to report. Page 9 continues with our discussion over our work on other financial reporting matters. The city adopted 3 new accounting standards this year, as previously mentioned: PS 3400 revenue, PS 3160 public-private partnerships, and PSG 8 purchased intangibles. As disclosed in the notes to the financial statements and previously discussed by administration, the implementation of these standards did not have a significant impact on the city's financial statements. We were able to execute all of our procedures as originally planned and have no findings to report. Our audit plan outlined other areas of focus for our audit. We executed all planned procedures as communicated. We are satisfied that our audit work appropriately addressed all of our areas of audit focus. As noted on page 10 of our report, certain adjustments were noted during the course of our audit. The management representation letter, which starts at page 19 of our report, includes the schedule of misstatements, both corrected and uncorrected. We would like to highlight at this time that yesterday an adjustment was made to our schedule of uncorrected misstatements. The adjustment is a result of a further refinement by administration of the estimated liabilities. Public sector accounting standards require that management consider whether any events between December 31st and the date of the financial statements approval. As part of our subsequent event procedures, we were notified on April 9th that administration had updated certain estimates related to these expropriation liabilities. As these related to claims that were outstanding at December 31st as opposed to new claims, this is considered an event that requires adjustment in the financial statements. We concur with administration's representation that the uncorrected misstatements are not material to the financial statements, both of the current and prior year. Accordingly, the uncorrected misstatements have no effect on our auditor's report. We are required to disclose any significant control deficiencies noted during our audit procedures, the definition of which is shared on page 11 of our report. We did not identify any control deficiencies that we determined to be significant deficiencies in internal controls or other control observations that warranted the attention of this committee. However, in response to the misstatements identified, we have communicated one control deficiency to management as indicated in Appendix 4. We understand management is preparing a response to this deficiency, and I'll pass it off to Natalie to conclude our presentation.
Thanks, Nico. The remainder of our report includes our management representation letter, and that will be signed by management on approval of the statements by council, and our draft unqualified auditor's report. Want to highlight at this time that as your external auditors, we are also required to read other information that contain the financial statements. So this includes the FSDA and the annual report, and we consider whether this information is inconsistent with the audited financial statements. Further, we verify that the figures presented in those pieces of information are consistent with the audited financial statements, and want to emphasize that we have no issues when we were carrying out those procedures or no findings. Close by saying that we really appreciate the continued opportunity to work with the City of Edmonton as your external auditor, and we thank administration for all of their support throughout this external audit process. With that, I will turn it back to administration and welcome any questions or comments.
Thank you. That's it. No further from admin. Okay, awesome. If we could have council and public members sign up if they have any questions. Okay, McDonald, go ahead, please.
Thank you, Madam Chair. Start off by thanking, the administration and KPMG for the presentations, very informative. My first set of questions are directed towards the administration. And we'll just jump right into the accounting errors. Thank you for providing some context. It's a little concerning that, it appears as though there are, more errors this year as in comparison with prior years. So I just wanted to understand what the root cause is, and certainly what management is doing to make sure that this doesn't recur.
Yes, that's a fair point. So we've looked at each of these errors and we've looked at the root causes for them. So the one thing I'll say is I think each of them is unique in their circumstances. So it's not something I would define as a pervasive control issue or something fundamentally incorrect in our processes we have. As we looked into each situation, I think we learned there's probably some training that needs to be provided and some clarification on processes. Some of these were a result just of turnover of staff in the areas as well. So new staff coming in and not completely understanding how the process works. So I think we're gonna address these through training, knowledge transfer, and just process clarification.
And thank you for that. So does it mean that at this point there is a reasonable comfort level from your end that there will be no further errors identified pertaining to the December 31st, 2024 financial year?
I think that's the first statement. I think based on the year-end audit being completed and our processes being completed for year-end, I don't think we would expect any more significant material misstatements for the 2024 year-end results. But like I said, moving into 2025, we're going to be implementing some processes to make sure errors of similar nature are mitigated as much as possible.
Yeah, and thank you for that. Certainly, I mean, I did hear the comment, repeatedly that the errors were not material, so that on its own, makes it, less of an issue. But it's just bringing it up to make sure that at least there is more attention paid to this matter as we go forward, because if it becomes material, it becomes a bigger issue for the administration as well as for the audit committee.
Yep, it's got our attention. We are taking it seriously.
Yeah. Okay. Thank you for that. I'll switch over to KPMG. My first question to you, again, after thanking you for the presentation, is at this point, do you see anything else that the audit committee needs to be concerned about, or are you reasonably happy with what you've presented?
Thanks for the question. At this point, we have no other findings to discuss with this committee other than what is included in our audit findings report.
Okay. And, coming back to the new accounting standards, from what you've seen elsewhere, are you reasonably comfortable that, the administration has addressed all the requirements, for the new standards that have been communicated?
Yes, what I would say is from our look, not only across the province, but across the country, both at the provincial government level and the municipal government level, the conclusions of the city are relatively consistent, where these three standards had a limited impact. And so I would say that the city of Edmonton is very consistent with what we have seen across other municipalities, and that their analysis was very robust and looked at a very detailed level at the various revenue streams, specifically where there could have been an impact that was greater. So really commend administration for the level of detail that was paid to there.
Cool. All right. Thank you for that. I'll pause for now.
Okay, thank you very much. And I apologize, I didn't acknowledge other council members that were attending online. Councillor Cartmel, are you there?
Yes, I am. Thanks.
Okay, thanks. And I don't think there's anybody else. My apologies for that. Thank you. And we'll move on to Councillor Nachman.
Thank you, Councillor Wright, and thank you both for the presentations. Just a few more questions on my end here. You touched on that the errors are probably primarily related to training, knowledge, process clarification. You're going to be doing some more work on that. I might have missed it, so you can mention if I did, but are those examples of something that, and then I'll ask our city auditor the same question, but do you review those to see if there's anything that you might want to have our city auditor do a deeper dive into just to make sure, or has there been conversation on that?
I think the errors that we noted, like I mentioned, Councillor Knack, I would say they were pretty unique in their circumstance. So I don't see a pervasive control issue there where I think anything else needs to be looked at right now. But we'll monitor it throughout 2025 and see what else we come up with. But right now, I think it's within our control to mitigate those risks moving forward.
Okay, that's helpful. And I want to put the same question to our city auditor since you're in the room, because I again appreciate training and knowledge. Those are sometimes one-off situations, so likely not a big deal from what I've heard and what I've heard in all of our presentations. Nevertheless, do you take a look at some of those things to decide, is there anything you want to look at in next year's audit process?
Definitely. Well, that's why I'm here, to get this information, and we'll have conversations as well with Harm and Stacey when we're planning for next year too, just to see where things are at and whether or not it comes to the top for an internal audit. We do rely on KPMG, and that is part of our standards as well, and we have conversations with them as well. So.
Yeah, and so if they had maybe identified something more significant in the external audit, that might be a greater flag to you for something that you would want to identify for 2026 and beyond.
Yes.
But what I've heard is you don't have that same significant flag, so we're good on that front. Okay, those are my questions for now. Thank you.
Thank you very much, Councillor Knack. Councillor Rutherford.
Yeah, thank you. Just trying to get some of my notes in the documents. I guess I'm going to start with a more broader question. I at the beginning of the presentation, you talked about how the City of Edmonton has a AA rating from, is it SMNP?
Yeah, Standard & Poor's, S&P.
S&P. Just for public's understanding and some of the, I think, public discourse, what do they factor into that, and has that rating changed recently?
So it's a AA with a positive outlook. So what they do is they meet with administration and they go through essentially our financial forecast, our financial processes, our financial records, and based on that they talk with senior leadership as well, and they get an understanding of how financially sustainable they think the city is. So it's a pretty thorough, robust process, and then they make a statement on the city's financial position.
And so, has it's been AA for how long?
I'd have to go back and look.
For a while.
Yeah,
I think
it's been pretty consistent.
It's been pretty consistent. But we jumped up to a AA at one point, and then we've kind of stayed there consistently.
I'll go back and look.
But even like through COVID and all of the troubles, we've maintained that through good, sound financial processes.
Yes, yeah, and it's been consistent. There hasn't been any significant change. Yeah.
Perfect. Thank you. I just wanted to like get a little bit more of an understanding of some of the changes that are being made, and I circled it and now I can't find it on my notes. Of course, multitasking is never the best. Oh, I'm on the wrong report. I was in the attachment, not the actual body of the report. Ah, good times. So for the changes to the accounting standards, I really liked your breakdown in the presentation, and it talked about that these requirements are adopted on a prospective basis, with no adjustments made to comparative figures. So I just want to know, like, as a member of audit committee, what do I need to look out for in terms of like what's changing and what we should be cautious about not comparing with the, do you see what I'm trying to get at?
Yeah, certainly. And I think, we present to audit committee, so we try to present to you what the financial impact in the current year is of these standards, which we did. We make an assessment of whether we need to restate retroactively or just change the process moving forward based on what the materiality of the change.
Okay.
So if we think it's going to be a big change and to the financial statements in prior year, and we think it'd be useful for the user to know that, then we might go retroactive. If we think it's a minor change that we can just change moving forward, then we'll go prospective. So you can, with the P3 standard, for example, that one, we had already been following P3 accounting standards in the past, so there was no need to go back and retroactively adjust.
Yeah, no, that's, okay, that makes sense. And what's, for somebody that, again, that's not in the auditing world, maybe I'll put this one to KPMG. What does non-material mean? Like what's the threshold? What kind of things go into determining when something is material or non-material?
Thank you for the question, Councillor Rutherford. So when we assess materiality for the audit, it is a standardized process that is set out by our regulators. Materiality is the number that we say that if there was an error in excess of that balance, it would bear on the decision-making of the users, so primarily this audit committee. As we presented in our audit plan, we determined materiality to be $105 million for the city, and that is determined based on a number of qualitative and quantitative factors. From a quantitative factor, we look at benchmarking it against the expenses of the city. That is the primary focus of administration. You can control expenses. That is, we want to understand the cost of our services. So it is a key indicator of the size and the risk of the organization. So we do benchmark it against that. We do sideways glance to other metrics as well, such as total assets or total revenues. Again, those are the, I'll call secondary indicators of size and risk of an organization. Then we look at other qualitative factors, the amount of leverage in an organization, ownership structure, volatility in the overall environment that they operate in. So there's a number of things that are considered that, again, will either push that number up or down. So all of those considered, we did determine that $105 million is the quantitative materiality for the external financial statement audit. And based on our update of that at year end, we concluded that remained consistent.
Very thorough answer. Thank you so much. I appreciate it.
Yeah.
Thank you. Oh, Councillor Principe removed herself, I guess. So I'm just wondering, the changes that you found, were they a result of like having to do things differently with the standards, or was it based on your approach taken to the audit, or other reasons?
You're discussing the misstatements that were
Yeah.
arised? So those, some were discovered by administration throughout the year, as indicated in the schedule, and some were the result of procedures that we performed. So when we do find misstatements, we do revisit what is our approach, where in this situation here, we would have performed additional procedures when we do find the misstatement to make sure that there's nothing else.
Okay.
And so based on those additional procedures, we are satisfied that the risk of material misstatement in the remaining work is reduced to a remote level.
Okay, so it's everybody working together.
Exactly.
Okay, perfect. And yes, I was going to ask about the credit rating as well, being maintained. And then sort of, I think in your estimation then with the controls and the training that are going to be in place, that still puts us in a good position going forward.
We'll revisit these next year. So
Okay.
two things I'll say. We don't consider this to be a significant control deficiency. It is a control deficiency nonetheless, and we're going to look at management's remediation actions as part of the 2025 audit once we can see the impact of those. Based on what we've been shared today, I think that they're moving in the right direction, and it does align with the conversations that we had throughout the course of the audit as with respect to what the root cause are. So while I can't comment on whether these are fully implemented and fully effective, given that they are still in progress, that is something we would update the audit committee come the next audit planning cycle, and would look to work through with administration throughout the year.
Okay. And I just wanted to ask, there was, when you said that, what page is it? Page 5 of one of your reports, is updating the audit committee on significant matters, if any, arising from the completion of the audit. And so when would you be advising that? Would that be next?
So that'll be twofold. So today we did bring to your attention that we did update our misstatement schedule. We're not expecting any further adjustments from our audit plan, given that we are substantially complete. So if anything were to come up between now and the 22nd, we would work through administration or the city auditor to make sure that this committee was made aware of any new instances or any changes that need to be made. However, at this time, we're comfortable that we will not be finding anything additional.
Okay, awesome. Good to know that. And then I guess maybe to administration. On the portfolio investments, so finding that extra $18.5 million, does that help us in any way? Like, do we have more money?
Yeah, so if you recall back to our preliminary year-end results that we brought back in March 18th, there was an increase in investment earnings reported. That was this item.
That's that? Okay.
And just if with our kind of budget practice, we transfer that to pay-as-you-go.
Okay.
Right, so it doesn't impact the bottom line, it's just in and out.
Okay. Then I think that's it. Yes, that's all. Okay, thank you very much. And do we need to do a second round? No, we're committee. So Mr. Matamambe, go ahead, please.
Thank you, Madam Chair. I have a question that's directed to management, the administration, pertaining to the financial discussion and analysis. I know I didn't hear a lot about it in your presentation, so I just wanted to know if the information that's presented in the FD&A, is fair and accurately represents, the financial statements that were presented.
Yes, the FSD&A is a fair representation of the financial statements.
Yeah, and from your understanding, basically all the information is consistent with what's been publicly disclosed, and there are no material omissions or inaccuracies in there?
Correct.
Okay. Does KPMG at all look at it? I know I'm asking you, but maybe I should be directing that question to KPMG.
Thank you. Yeah, so we have certain obligations to look at the annual report, which does contain the FSDA. So we read the report, similar to the questions you just asked of administration. We want to make sure that it is materially consistent, both in the numbers that are presented there and in the qualitative discussion. So we look for material inconsistencies. Based on our procedures performed, we have nothing to report.
Okay. Thank you for that. And then a follow-up question to the administration. Any compliance issues, identified in, or omitted in the FD&A?
So quick answer, no, but maybe just understanding what you mean by compliance issues.
Just general compliance issues, like regulatory?
Yeah, no, nothing
to
the
like, yeah. Okay, all right. Okay, thank you for that.
Okay, seeing no one else on the board. Sorry, I guess I should put forward the motion to accept the reports for 5152.
So just noting 5.1 has a different recommendation.
Oh, my apologies. Okay, so do you want them? Okay, so for 5.1, that the audit committee recommend to City Council that the 2024 City of Edmonton audited consolidated financial statements as set out in attachment 1 of the April 11th, 2025 Financial and Corporate Services Report, FCS 02843, be approved. And, whoops. What's that? And do them separate? Okay. All right. Anyone to speak? No, let's vote on this. What's that? Okay, go ahead. No,
Yeah, sorry. You know, I mean, I know that the non-regular audit committee meeting where we talk about this, surprisingly really has people in the audience, including today. But I know it's really important work, so again, a huge thanks to KPMG, thanks to city staff. I think, you know, appreciate that there were a few more errors than we normally saw, but I've heard through the work, through the reports, and through the answers to the questions today, I feel comfortable that this isn't something that we should be, there's not a big red flag in my mind that we are headed down the wrong path at all. So I just felt it's important to acknowledge for the nobody that's watching right now, or hopefully, well, I hope people are listening, but we should just acknowledge that there's a lot of work that goes into this, and I do take administration at their word that they're going to be working hard to go through each one of those errors to check and double check and triple check to make sure that there's that everything is addressed. And again, I've heard through our city auditor that if for some reason as that work goes on, if there's anything that gives them pause, that they have the ability to bring that forward to audit committee to incorporate into their work plan next year. So comfortable approving this and appreciate, you know, I think it's important to be able to publicly talk about these you know, when it doesn't go 100% perfect, and how we work to address that going forward. So I'll support those. Thank you.
thank you very much, Councillor Knack. Anyone else? No, please. Okay, Councillor Rutherford?
I mean, I think I kind of echoed the thing. One of the things I think there's, you know, we talk about at this audit committee table is about risk. And one of the risks that has been identified is mis and disinformation as a corporation. And what I've definitely seen more, especially in the last year, is mis and disinformation about the city's financial state of affairs, financial management, and frankly, integrity, which all of those things are very untrue. The city has, as you can read in this publicly available report, extremely high standards of integrity and accountability, and standards, professional standards that they must adhere to. We also have an independent auditor that annually reviews these things and, as said, puts a lot of thought. I asked one question about the materiality, and the fact that that answer took 2 minutes to respond to and was still succinct shows you how much time and energy and thought and care goes into making any kind of statement about the financial records of the city. We also have a AAA rating, and that's another reason, a AA rating. We'll get there. A AA rating that, as I mentioned, is held consistent even through what I would consider some of the most financially turbulent times that this corporation has experienced, between the pandemic, between now tariff threats, and we're still maintaining that, which speaks again to the true financial due diligence and care that the people that work in financial and corporate services, including our chief financial officer, Stacey Padbury, put into this work. So I just, again, as Councillor Knack mentioned, it's unfortunate because these things don't get the attention when we're talking about them, but in not talking about them, we allow the space for that mis and disinformation to thrive. And so I definitely know my commitment is to continue to, any chance I get, educate people, and I really, really appreciated that we have a more simplified version that we share with the public too, because these documents are daunting, frankly, right? And Edmontonians are busy. And as much as they care about their city, and I know they care about their city, if they're gonna decide between going and hanging out with friends and connecting with people in their community or reading financial audit statements, I probably know which I would pick, so, so having something that's more short and easy to digest and clear and concise to the public, I think is also a really great strategy, and I commend administration for taking that proactive step with communication as well. So, thank you for this, and thank you. I always appreciate having our public members on audit committee. I lean to them a lot for the areas that they see as questions, and I listen to them diligently. So I really appreciate the questions around some of the errors, but I'm satisfied with what I heard around those. So thank you very much.
Thank you very much, Councillor Rutherford. Well, okay, if we have to talk about it, I'll talk about it then. So again, thank you. I do think it has been a collaborative approach that's been taken, you know, and knowing that administration has come forward with sort of some of their own findings as well to contribute to the report, I think just goes to show that there is nothing to hide, and you know, working in financial services, going through a number of different audits, you know, using this opportunity, not to thump somebody on the head, but to use it as a learning opportunity, and I think that's what's going to come of this as well. And as Councillor Rutherford said, there's been so many changes, you know, throughout the past 5 years, and that maybe has contributed to some of what the findings have found, as well as the changes due to the standards, the new approach that's taken by KPMG. And so I don't think that there's anything nefarious about any of these findings going forward. We still maintain our AA status, and I tried to write down the words that Harm said specifically, but a strong, stable financial position. Right near the beginning, was that it? So, and that's good to know as well. So, again, thank you very much for your work and your presentation today. Thank you. And then we will vote.
We have all the votes.
Display the votes, please. And that is carried. And 5.2, anybody want to move that one?
So move.
Thank you. Please vote. Oh, sorry. Anyone to speak to that one? Okay. All right, please vote.
We have all the votes.
Display the votes, please. And that is carried. Okay, moving on. There's no private reports, no motions pending, no notices of motions. We are adjourned. Thank you very much, everyone.